everybody? Happy Friday. Welcome to the TraderMerlin Show. It is your weekend edition, so cheers to everybody. We're doing what's the whiskey today is a Blinking Owl. It's a local distillery down here in Southern California. So going small batch, supporting the community today. Hope you had a great trading week. So Les, Margaret, David, Dana, Eric, Alex, good to see you. Ivzy, John as well. Gary, we got the whole crew with us today. So good to have you with us on a Friday, nonetheless. Smaller group for sure, but we'll have fun. All right, so as I mentioned on yesterday's show, today will be mostly viewer Q&A, although there's been a bunch of questions about different charts, so we'll spend a bunch of time looking at markets and going through charts. Lee, actually here for the live version. Good to see you, Lee. And engage this time, Lee. If you're here for the live one, always interact, talk to us, have some fun. All right, so here's our topic for today. Not that one. Since my screen got messed up, we will move this over and go to this one. So just trading week wrap up. January 7th is the date today. I will start things off running through the major market indexes and just kind of going from there as we finish this, I'm going to say tumultuous week. It was really tumultuous for cryptos, but certainly some volatility being brought back into the equity markets, which many of us are happy about. So I'll start with the best performer and work our way down. Gold up 0.38% today, but again, when we look at the big picture, what the heck's going on here, right? It doesn't really look like there's anything special going on with gold. Obviously, I'm happy because I'm long silver, which followed suit, but they weren't big gains. You know, it's minor stuff. 0.4, 0.38 is not really that big of a deal for gold. So technically, there isn't anything really here to talk about. I guess what I could do is draw in some lines and leave those lines there for a little while just to see how they hold up. So, you know, one of the things that I'm noticing on gold in particular is this compression of price. And I know a lot of you will draw your lines differently. That's okay. Draw them wherever you feel works the best for you. Technical analysis is definitely an art form. So some might put your lines there. Others might forget this peak that we saw back in August and bring it to somewhere like this where it touches more points. It still tells the same story, right? Which is that price is compressing. Price is kind of wedging, not really going up with any speed or down with any speed. So just consolidation, which, again, I'm still surprised. We talked about this with Mike McMahon yesterday. I'm still a little bit shocked that we're not seeing those commodities move like I expected against the inflation move, but it is what it is. Do I actively short crypto? Sometimes I do, Margaret. Sometimes I do. Not very often. But right now would be a great time for it, huh? Whew. All right, and so let's go from there. We'll move down the list and go to the YM, which is one of your better performers today. It was only down 0.04%. And you can see for the whole week, I'll switch this over to a weekly, which might make it easier for analysis. This is something to pay attention to, right? So granted, the Dow is one of the most, I guess, one of the best looking charts right now. It's got the, you know, through all-time highs, etc. But one thing to pay attention to, and I know Bob Dunn, we've got a lot of people here who follow Bob Dunn. If you're looking at this price pattern right here, you have a shooting star that ended the week. And I know some people like to look at a monthly time frame. We're not there yet, but at least on the bigger time frame, it's starting to set up for, you know, a potential short if we get the right confirmation signal. So I'll put a low across the bottom of this week's shooting star on the Dow Jones futures. That low is 35,988. So I will put an exact number on here for us. And, of course, you get to enjoy my dogs barking in the background. Isn't that wonderful? All right, so hold on one second while I mute my microphone and tell the dog to shut up. Perfect. Now we're good. All right, so this, again, I don't trade the Dow. I haven't traded the Dow in probably 15 years. But for those of you who are trading the Dow, check it out. There might be an opportunity here. Next week, once we open up, if we get an open up above this upper blue line and start to traverse down, there may be some short opportunities here. Again, a large part of trading and investing is waiting for that market to tell you what to do and actually give you some signals. So this one is setting up for the bigger picture potential sell-off. Now, for the week, again, it was slightly down, but nothing compared to some of these other indexes. Any options on crypto? Yeah, absolutely, Jimmy. There's not in America. Haha. Not in the United States. There's different sites you can use that have full gamut of options on not everything, but a lot of the major crypto names out there. But if you're in the U.S., can't use them. It's just it's a travesty. All right, so let's go back to the charts. I want to run through the top 7, then get to a bunch of listener questions. S&P 500 for the week showing a pretty ugly move, right? We had that kind of not really a shooting star last week, but this week, one big engulfing formation. On the daily, you can see the price action has been decisively negative over the past 3 sessions. But granted, where are we at, right? We are still looking good overall. Not that big of a deal, at least at this point. Personally, I think the 4,500 mark for the S&P is that moment where we should start being concerned that this uptrend may be stalling, if not reversing. But until then, no worries. I think we still keep on moving to the upside here. All right, so that was your S&P. Crude oil was down 0.7% today. You can see that for the week, though, pretty good move, right? There aren't too many that showed a nice big green candle, but we saw that on crude oil, which is going to be coming up and challenging those highs here. Certainly right around that 93.50 will be your next logical target for crude oil. We talked about this formation before where it's just making a series of higher highs, higher lows. So this lower retest we saw a few weeks back in November of last year that came back down to that 61, call it 62 mark. That was important, right? That to me is a pretty significant little dip coming back down, but it didn't break it. So for right now, uptrend is still intact. I expect to be challenging those highs here soon. And according to this daily chart, I think you'll probably see that happen next week. We'll get back up into these highs. I mean, that's a pretty aggressive call, but certainly a week or two to get back up to those highs. All right, next on the list, Nasdaq, NQs. The worst looking one, at least from my perspective, for the week. Those last 4 days have been pretty ugly for the Nasdaq. I was actually thinking we would hesitate a little bit with yesterday's candle, but we had some follow-through downside move. You can see we came right back into these tails that go back, we're on the daily here, goes back to December 6th and also back into December 20th. So kind of tapping that line. If you wanted to, you could move this lower blue line, but I'm using that as kind of my demand zone for a potential buy point if I felt comfortable buying, which, let's be honest, I don't feel comfortable buying the Nasdaq right now, but that was my targeted area to buy a pullback. This one on a weekly chart, definitely looking worse than the others. Big red candle engulfing weeks worth of trading activity. Again, I think when you look at the bigger picture, it's still not bad, but if we get below these numbers, then all of a sudden, I think we start to have a bigger problem for the overall market. All right, I'm almost done. Russell 2000, you can see blah, 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 blah for the Russell, stuck in the yellow range, no big deal. And then this was the ugly story for the week, if not the last 2 months, has been Bitcoin. You guys saw this shooting star all the way back here in November of last year, and we have not stopped. I mean, it's just ugly to the downside. I've been talking about this in the Crypto Investor Live that I thought 42 was where we're going. And lo and behold, here we come, back down to 42. The question for now is, what do we do if we break this? You'll notice that the real next stop is right around 32. I got 30 to 32 on my radar for the next big drop. But again, that's a 25% decline from current levels. So for anybody who's looking for an opportunity to buy into crypto, you might want to wait a little bit because at this point, things are very negative. And as we talked about in the CIL, there are some massive external forces which could potentially push this much lower. And again, that's something that is being whispered about in the industry, but we've been talking about it in the CIL just because you got to be aware of all the things that can move your markets up or move your markets down. RSI on which one, NJ? He's always looking for divergences. 32K looking good? It does. And I guess I could probably add that level in here. Just do this right here. I don't want it to because I'm still going to hold my Bitcoin regardless, right? I'm going to hold it regardless, but that's the next logical point. And somebody was talking to me the other day and it's like, oh, we can't go that low. It's like, look, man, you see where this thing came from? We were at 5,000 in March of 2020. So don't tell me it can't go down to 5,000 again. It can easily come back down. And given the amount of institutional investment, I don't think that it's going to drop that low. I think if it gets that low, what you're going to see is a lot of institutional people jumping in and pushing it up. As Margaret says, over-leveraging is a big factor here because leverage positions have been getting liquidated. And the sharper that this falls, the faster it's liquidating those leverage positions. So, I think you'll probably see more of that. There's a lot of people who are using this 40,000 as a backstop right now. In my opinion, if I'm an institution, I know that people are using that as a stop loss. So what am I going to do? I'll just sell a bunch of Bitcoin or short it, right? And I will crush it past 40, trigger one last surge in margin call, meaning getting all these people leveraged out. Boom, I can now buy back in at 30. So I can short the hell out of it at 40, buy back in at 30. And because I'm so big as an institution, I can manipulate that market and get rich for it. Nobody cares because it's not regulated. Anyway, those are your major ones. We can talk about more of these as we progress, but just wanted to run through those ones real quickly. I have a massive headache today, so I'm trying to keep my energy and tone going, but my head is just killing me. Let's see. Big M, I'll reload at 30-ish. I will as well. I will definitely. It's funny because my brain was telling me that 30 is going to be the floor, but you know what? It doesn't have to be. So I will definitely be buying at 30, but I'll have a little bit of cash available in case it continues to go down and buy more, because long term, I think we're very good. All right, let me go and talk about some of the things that came out today, which I think were interesting. Obviously, there wasn't too many major headlines. The beige book we saw, or the FOMC meeting minutes that came out earlier this week, that to me was one of the most anticipated events of the week for me. Today we had a couple big ones, and here they are. You can see on the screen, unemployment rate way better than expected. They're expecting it to go from 4.2% down to 4.1, which, okay, great. We are seeing a lot of job creation, and hopefully we'll get back down to the under 4%. Well, we came out at 3.9, which was much better than expected, which is interesting because you have this strange number right above it. You guys can see the unemployment rate right here. But right above it, you have non-farm employment change, meaning job creation outside of farms. They expected to go from 249,000 the previous month to 426,000, a huge increase, yet we declined to 199. So I'm seeing unemployment numbers get better, meaning more people are working, but a lot less jobs being created. So kind of a strange duo of numbers there. One thing that is good for our markets is above that, you can see that average hourly earnings increased 0.2%. So we went, they expected to stay in line at 0.4. We came out at 0.6, so an increase of 0.2%, which should, in theory, be good for the markets. That means more money for the average hourly person to create and spend. Job creation, or people leaving the workforce, or both? Tom, that's a good question, and I'll be honest, I don't know. I don't trust those numbers. If you look at the unemployment numbers, there's U1, U2, U3, U4, U5, and U6. And each one of those has some different calculation as to who's considered working or not working or looking for work. Generally, the number that most of the people, especially in the Austrian School of Economics, are going to look for is the U6 rate, which is much higher. I haven't looked at that, but let me see here real quick. If I can pull that one up for you. U6. There's actually a really cool table, unemployment rate. Yep, a really cool table put out by... It should be, there it is. Let me see if I can bring this up for you. No, this is the so this is the U6, which is currently sitting at 7.3. There is another site that I've used in the past that's just a table, just filling existing jobs. For as far as unemployment, yes, that means just people going back to work. And Lee and others, you're probably right. I'm sure a lot of the unemployment rate are people who've just given up looking for work or don't want to work. I still have friends who don't want to go to work because A, they're afraid of COVID, B, they're making money other ways, maybe undocumented, or C, just collect unemployment and I'll sit at home and do nothing. So unfortunately, we're still in that situation, but it is encouraging to see those numbers back down under 4%. I mean, that's a really good place to be. Years ago, when we were back in the financial crisis situation, the Fed was saying that full employment to them was, I think they said 5.5%, and all of a sudden we ended up down in the 3%. So good. I mean, it's good to see the economy getting back on track. All right, now, listener questions. And there were a few doozies for me, so I didn't have enough time to really research these, but I'll do my best. I got to start with this one. Unfortunately, I wasn't feeling so good this morning, so I didn't wake up to get this. But Lee, I'm glad this worked for you, buddy. It was almost too easy. Big Eb, did you take this one as well? Lee said, thanks for the heads up on GameStop. I bought January 21st 110s, 50% rate of return in just a few hours. I don't know if you guys saw the chart. I'm kind of regretting the fact that I wasn't feeling good, but check out GME. What a beautiful... This is the weekly. We'll go to the daily, and look at that candle. I mean, it pretty much opened up and just crashed from there. Love it. So look at the intraday. I'll go to let's do a 15-minute chart. And I mean, this thing was just free fall all day, so very easy in a short period of time to gain some profits on it. The challenge is, your premiums are going to be very high. I didn't see that. I did not see how much those premiums were, but hey, Lee, you finished your Friday trade with a 50% gain on one trade. Bravo, my friend. Go enjoy it and hopefully have a great weekend because of it. That was one of those ones that was almost too easy. I mean, now GameStop is saying that they're going to do NFTs. I mean, what's next? GameStop is going to have a COVID vaccine like Kodak did? Remember when Kodak did that? I don't know if you guys saw Kodak. Here's Kodak, who said they're going to come out with a COVID vaccine. Let's do a weekly. This is a 15-minute. Yeah, you guys see that one? Once a pile of dog poo, always a pile of dog poo. And you can see Kodak shot from 250 all the way up to $60, where some poor Reddit reader was sitting there thinking this thing's going to go to $100 and is still holding the bag. It's $60 on Eastman Kodak because it's now at $4.56. Yeah, we totally did. Yeah, right. Good on you, Lee. I'm bummed. It was one that I think was the proverbial taking candy from a baby. I mean, come on. How silly do you think GameStop's going to... We're making NFTs now. All right. You're a little late to the party, buddy. A little late. Let's see. What else do I have? Okay, this is a good one. And this is from Jeff. Jeff says, what's the easiest way to compare all the sectors against each other? For the strongest sectors, how do you find what are all the stocks that make up that sector? Lastly, how do you find the strongest ETFs for those sectors? So it's not necessarily that I'm looking for the strongest ETFs for the sectors. I'm going with kind of the most notable, most liquid ones. So those are generally going to be the spiders. So things like XLE, XLF, XLK, the XL series, if you will, are pretty much the dominant ones. Now, there's a lot of different software you can pay for to allow you to chart that comparison. But, I'm not going to let you do that. You can get it for free. I actually built one out here for us just before the show. If you go to stockcharts.com, real simple, right? You go up here to where it says perf chart, and you type in perf chart, and then you put in all the symbols that you want to compare. In this case, you can see I did the S&P against, I'm highlighting this search box, this box right here. That's the S&P, and I've got energy, industrials, materials, real estate, financials, technology, healthcare. So I've got pretty much utilities, all the main sectors in there. And then what's nice about this is A, it doesn't cost you anything, but B, you can adjust this slider over a certain period of days. If you just want to see what it did over the last couple of days, there you go. You want to see what it did over the last year or so, you can just slide this to however you want. You want to go back to 5,400 days back, all the way back into 2000, you can see that as well. We've got right now real estate. Interesting. If you go all the way back into 2000, real estate's the best performer. You would think it would be the S&P 500, but real estate up, let's say 687%, where the S&P, oh boy, it's tough to read these bad boys. S&P, where are you? S&P's up 370%. Anyway. So, Jeff, that's the easiest way to do it. Now, this is where it gets a little more challenging. I actually created a watch list for the show, which I was giving out, and I can see if I can still have it, or see if I have it here. I created for the TraderMerlin show, really for myself, but I did it for you guys as well, a list of, it's a watch list. So let me see if I can find this for you. I think it's under my materials. Ugh, God, I got so many watch lists. So I created this spreadsheet just for me, but I think it's great for you guys as well to utilize. You see across the bottom, I have these different tabs. So I've got XLE, and these are the components of XLE. Here's XLF, those are the components. XLP, those are the components. So I have them for some of the major the ETFs that I look for. Here we have the infrastructure one that we talked about as well. I can send that to you if you like. It's easy. You can just email me at tradermerlin@gmail.com, and I can send that list over to you. But remember, if you look at the XLE components, for example, they're going to change, right? You're going to see over the course of time, energy will replace some of the stocks in there. So do your due diligence and make sure you check and see what's been moved in or out of those, but that's a great starting point. Now, if you want to do this on your own, there's an easy way for that too. So barchart.com, so here's barchart.com, and once you get to barchart, type in any ETF. So let's say you wanted to look at IYR, right? The real estate ETF. So I go IYR. So it brings it up. You click on that there. And then down on the side, if you scroll down, it says constituents over here on the left-hand side, which my cursor is moving around over here. When I click on constituents, it will bring up all of the different elements that are inside of IYR. So it's got American Tower, Prologis, Crown Castle International, and a few public storage, a whole bunch of different stuff in here. So that's one way to find the list. But what's really cool about barchart.com is you can click download here. All right, so you just click on download, and then you can export that to a spreadsheet. Now, you have to be a member, but membership is free. I think you can do what's like 5 a day. You can do 5 downloads a day. So just spread it out over a couple days, and you'll have access to all those different components. And I think it's great, especially when you look at something like, there's been people ask me about different solar ETFs. So let's say we look at TAN, right? TAN is one of the solar ETFs, so I'll bring that up for you. And I don't know what's in TAN, right? I'm not a huge solar person. That's not my area of expertise. But here's the TAN ETF on the weekly. Okay, it's selling off. It's coming into a demand zone over here. Maybe we want to look for a buy point. And maybe you think you just want to buy the ETF. Fine. But what if I wanted to buy some of the components? Well, I could go here. Oops. I go to bar chart, type in TAN. All right, it's going to bring up, no, that's travel centers. We don't want travel centers. Totally different. TAN, come on. Why are you not, there, Invesco Solar ETF. I don't know why it didn't load up. So once you do that, again, I'll go down here to constituents, and then you can see all the different members of it, and then you could go, just like I had just done, you could take this and put it into a bar chart or a stock charts perf chart and see all the comparisons. So that's how I do it for free. Otherwise, I'd be using something like TradeStation, but I'm trying to move away from TradeStation altogether just because it's TradeStation. So anyway, hope that helped, Jeff. That's it. And what's nice about that is when you do break open a sector ETF like energy or industrials or something, you'll find some clear winners and you'll find some clear losers in there too. Just because an index is up 3% doesn't mean that everything in that index is up 3%, right? Some's going to be up 6, some's going to be down 3, some's going to be down 10. Clean energy it usually ends up as a yeah. Well, I think, I don't know, I'm not speaking for you guys, but I would hope that clean energy amounts to something. I think we need to find as many ways as possible to generate electricity or energy or power our vehicles or homes or whatever with as least impact on the planet as possible. But maybe that's just me. All right, what else do I have? So this has been the big topic, certainly for the last month and a half, as crypto has been just melting down, and I don't see it stopping. I see it actually going to continue to the downside. Mike says, like everyone, I'm looking for a reversal on Bitcoin. I'm seeing a pattern today, and unfortunately this was yesterday, that gives me hope. With many Bitcoin stocks and Bitcoin gapping down with a reversal spinning top, do you agree with the pattern, or could this be the bottom? And could this be the bottom? I've included some charts. So here is the charts that he sent, and Bitcoin's in this bottom left-hand corner over here. So the candle that he had, actually not too bad, right? It is like a little spinning top formation, and it was near an area of demand. So I will go back to our regular chart where I can bring up Bitcoin. Let me bring up BTC here. And I'll put that back to a daily. Don't worry, I'll bring you guys the chart in just a second. There you go. So let's see. We got him on a daily, just exactly what he had. So the challenge here is the candle that Mike was talking about was, I believe, this one from yesterday, right? And it is a spinning top, but was it in a demand zone? In my mind, no, it really wasn't. It was a little bit above it, which is still fine, but I think deeper down, like if I saw this spinning top formation in a demand zone, I would probably give it more weight. And again, don't just think that Bitcoin's going to bounce. I mean, you have to remember that this thing was, let's say, $5,000 just a year and a half ago. So it has plenty of room for downside, and don't bankrupt yourself trying to pick the bottom on this thing. Make sure that if you're trading with risk capital, money you can't afford to lose, that you have stop losses in place, because the trend is your friend until the bend of the end, right, everybody? You hate me saying that one, but what's happened since November? It's just been lower highs, lower lows, lower highs, lower lows, with no sign of stopping at any point. I mean, right now you have what some people are calling a left shoulder, the full head, the right shoulder, all of a sudden head and shoulders pattern. What does that mean? Oh boy, we really don't want to see that, because if that were to happen, that means that you're looking at a much, much lower price for Bitcoin. If we use pure technical analysis, it would basically say Bitcoin's down to about 14,000. And it could happen. I mean, hell, it could happen. It seems crazy, but it would just put us right back into the long-term trend of Bitcoin. I know it seems absolutely insane, but don't shoot the messenger, right? I mean, if this is my historical long-term picture of Bitcoin, I'll do it on a monthly, right? Doesn't that look like you'd just be coming back to normal? And I don't want to see it down at 15,000 or 14,000, but you look at that trend. We could draw some trend lines across the lows here. That's not a pretty picture. Now, I don't think that this is going to follow that. I do not think it's going to go that low. But I'm just saying it can't, right? This isn't a company that has earnings. This is an idea. This is a concept for the future of financial markets, and hopefully it will work out. All right, so Mike, there you go. What else do I have? Oh, Tran. I think I talked about this one the other day. Tran says, you mentioned that Robinhood might be an acquisition target. How do you know that, and when will announcement be? Well, I don't know that. I don't know that at all. I'm looking at it as a hypothesis. So if I'm the guys, and I forget what his name is, but if I'm the guys that are running Robinhood, and again, they have a lot of VC money, venture capital money's in there, and they all want earnings. If they move away, or if they're forced to stop their sale of order flow, remember, when you make a trade on Robinhood, they take your order and they are bundling it with all the other orders and they're selling it to another company, a trading firm who may be trading against you, right? That's how they make their money. So if there's no commissions, your orders are being sold, and the SEC is trying to stop that, or at least is concerned about that. I think they should stop it anyway. If they stop that, then how does Robinhood make money? They will start to charge for commissions. They have to. There's two solutions. Number one, you sell for commissions, or you start charging trade commissions. And what's going to happen? All those little Reddit Wall Street Bets people who are like complaining that they have to now pay $2.99 or $5.99 or $9.99 per trade for their one share of GameStop that they think is going to go to the moon. Oh yeah, if I were Vladimir, there we go. That's his name, Vladimir. He kind of looks like a vampire too. Like if he had like a red collar and a black cape and some pointed teeth. This is Vladimir. I like this. My impersonations are not going to do well today. They have to start generating revenue. And if you look at the price of Robinhood, you know, there was a guy on Twitter, again, who was telling me that he thinks it's a time for a buy. And I'm like, no, bro, I pretty much think that you're going against the trend. I mean, at some point it'll be a buy. But I guess you got to look at the book value or some of the fundamental equations, because the other solution, which I think is the most logical for Robinhood, if the SEC says you're done with payment for order flow, you can no longer use it, then the other solution is they sell, right? So if they sell, who are they going to sell to? Who wants them? Well, keep in mind, does anybody know how many customers Robinhood has? Any guesses? I'm going to wait a sec because I'd love to see this one. How many customers does Robinhood have? I mean, this is pretty important, because if I'm Charles Schwab, if I'm Morgan Stanley, right, I'm looking to increase my assets under management or get new clients into our funnel, whatever products we want to sell to, Robinhood has a huge amount of people there. Now, here's the funny part. Robinhood, and I'm still waiting for the answers, but Robinhood has, I'm a buyer at 50 cents. I'm with you, Margaret. I'll probably buy it. If it gets down to like $2, I'm in, because I think they'll sell for way more than that, right? Robinhood has roughly 22 million customers. 22 million. And they have roughly $80 billion under management. So you have 22 million customers that hold $80 billion worth of assets, which the funny part for me is, if you take $80 billion and you divide that by 22 million, you come up with $3,636, I think. Yeah, $3,636 per person, per account. So these are small. These are chump change accounts, right? They have 22 million customers and 80 billion under management. So, at some point, what do they sell for, right? What is each one of those customers worth to a Schwab or to a Fidelity, right? Or a Morgan Stanley or JP Morgan, right? To me, that's where the value is with Robinhood, right? Other than that, their business model is under serious attack. So Tran, I don't know when the announcement is going to be. There may never be an announcement. I'm just making the assumption that the value of Robinhood right now is not in their trading. It's in their clients. It's in their database. And if they can no longer effectively trade, or that database starts to leave because they now have to charge commissions, well, then the value is only going to be in the customer database. That's it. That's a lot of Mary Mendeley hanging. Well, look, Robinhood, I don't know how it'll end for them. I think there might be some kind of transition. They'll probably say, the SEC will say, as of, December of 2022, we can no longer use order flow. So giving all these companies a lead time to prepare for that. Now, I don't know. I'm part of the belief that they should get rid of order flow. I think that personally it's a conflict of interest. I mean, think about it. Let's say I'm Citadel Derivatives Group and I got a big position in, Intel. And I'm looking to unload it. And all of a sudden, you guys are all Robinhood traders and you put a bunch of orders in there to buy Intel. Well, I'm filling your orders. I'm literally trading out of my own inventory. It's not even going to the exchange. I'm literally seeing your orders going, oh, sweet. I got suckers here I can just unload to you. And if I see a bunch of orders, I can move up and let that price move up a little bit and sell at a higher price. Even better if there are some big fish there, and of course there are people with big accounts who are thinking, oh, I'll save myself $9 in commissions. Then what they will do is they'll go and buy a big block of shares, and Citadel or whoever's buying the order flow can look at that and say, I'm going to jump right in front of that order. I will buy some right now, and then I will let their order go to the market, and it'll make me money. So big conflict of interest. Big conflict of interest. Oh, I like that, John. I like that. Trading for the masses, the Spirit Airlines of trading. I always heard bad things about Spirit Airline, and then I actually flew on them. Oh my goodness. What a horrible experience that was. Actually, I never got to fly. I never even made it on the airplane. It was that bad of an experience. Anyway, so trend, right now, that trend on Robinhood, it's a sinking ship, right? If this was the Titanic, the band is already sliding a little bit. They're still playing. Because you're at, $16, but they're sliding off that deck a little bit. It's not going to look pretty here for Robinhood. And at some point, it'll probably have a nice pop up. But what's gonna bring in new people? What's gonna get people excited? I don't see too much happen with Robinhood. Maybe me. I'm a bitter cynic. Let's go to the next question. Can you talk about IYR chart? I'm long and wondering where to put my stop losses. Yeah, you know what? I was looking at different sectors because I was thinking about doing some I was thinking about selling some options today. Man, my mind is a mess. And I was looking through some of these XLE type ETFs, right? So this is my watch list for my 1% portfolio. You can see XLE ripping. Energy is on fire right now. So is financials, right? Financials ripping through to all-time highs. To me, the financials one was expected. I expect financials to continue because of the raising rate environment, but XLE energy, that is a pretty remarkable chart. One of the better performing, certainly over the past couple of weeks, just ripping to all-time highs. You look at utilities. Right, utilities taking a little bit of a dip. You look at industrials kind of holding. You look at materials, a little bit of a sell-off. You look at healthcare. That's one of the bigger ones, right? You have a pretty significant sell-off in healthcare, but here's real estate, also a pretty significant sell-off. And, Dorothy says, can you talk about the IYR chart? I'm long and I'm wondering where to put my stop loss. Well, my rude instructor, tough love person would say, well, how did you open a position without having a stop loss in the first place, Dorothy? Because it tells me you bought something and you didn't have any defined risk. You just said, I'm buying this, right? So you should never buy something without knowing exactly where you're going to get out. Because now if you don't do that, it's an unlimited loss theoretically. If you do say, here's my defined stop loss before you buy, then you can now understand exactly how much you're going to risk and see if that is palatable for you. Right now it's an open-ended question, and that's a dangerous, uncomfortable place to be. So when you look at this current price chart, I don't know why you bought or where. It says you're long and wondering where to put your stop loss. So I don't know where you bought. I'm hoping you didn't buy over the last week because there's really no reason to buy this other than maybe a breakout trade, right? Which could have happened, a breakout to all-time highs. There's a bunch of different levels you could look at. So for example, we get some horizontal line in here. You have this most recent challenge that it's had right around 109 and a quarter. Going back into mid-December, we hit that a couple times, but still on an uptrend, broke out, and moving higher highs. So for me, that would be your aggressive stop loss. If you want to be a little bit, give it more room to run, then you're looking somewhere down below 105 as a stop loss on this one. At this point, if you were to get out at 109, it's still in an uptrend. So if it hits 109, this is still a strong uptrend. If it breaks 105, now we're starting to see a change. If it gets down below 101, let's put it right here. If it gets down below 101, now you're on a reverse trend, right? Now you're on a significant reverse trend, and you should definitely be. That's the ultimate stop. If you're not out by 101, you're in a world of hurt because that thing's probably going to keep on dropping. But right now, it's still in an uptrend. And I think that part of the reason you saw the sharp decline this week was because of the FOMC meeting minutes. It's very clear that rates, it's no longer a mystery, right? No one's sitting there going, I wonder if the Fed's going to raise rates. They're basically saying, we're going to raise rates sooner than we expected, which goes right in line with what I was saying all last year, that they're going to be put in that situation where they have to raise rates. So, we talked about this with Mike McMahon yesterday. The meetings in March, could they raise in March? They could. That would be, personally, I think if they raise in March, that is a very bad sign. That's the oh shit sign. I think it'll go to the second meeting of the year, which I think is in May or late April. I think it's in May. That's more logical. They'll do a May, they'll probably do a June or July, maybe something in September. So we'll probably get 3 next year. Unless things get out of hand, then we'll jump to maybe 4. So there you go, Dorothy. That's where I would put those. But again, anytime you even think about buying something, you should consider right away where your stop losses are. That's critical. New Hood exec was responsible grooming Thinkorswim for sale to TD Ameritrade. Yep. Somebody always wants to acquire trading platforms. And in this case, the value isn't in their trading platform, right? Because if anybody's used it, it sucks. I mean, their platform's bad. However, it's their database. Their database has all of the value, future value, especially for a major investment firm, right? Because a lot of those people, it sounds condescending, I know, but a lot of those people in Robinhood, they don't know what they're doing, right? They're just caught up in some Reddit chat room, Wall Street Bets type stuff. They jumped on GameStop at $400, and now they're just sitting there realizing, I don't know what I'm doing. I'm a mess. Well, you know what happens is some financial advisor will say, listen, I can help you. Oh, yeah, I need help. And next thing you know, they take over the clients and more business for, your Merrill Lynch's, etc. Short term, I think people are rushing to buy real estate ahead of the rate increase. I believe so. That's the logical thing to think, right? Big Ab, is if rate increases are going up, you might want to get real estate right now because, you're going to be paying 1%, 2%, 3%, 5% more in the next couple of years. Over the long term on a 30-year fixed mortgage, it makes a huge difference going from 3% to 6%. Monster difference in monthly payments and overall interest paid over the course of 30 years. So that obviously is a big factor. But remember, we've seen 20% year-over-year growth. Oh, more Russian people trying to spam me with porn. Bye. All right, sorry, I had to just get that guy out of here. And it's similar to Tom just put in there, Schwab acquired TD just for the assets under management. Could do the same for Hood and move them to Thinkorswim. Exactly. Because it's what? It's $80 billion worth of assets, right? It's not chump change. I mean, $80 billion is a massive number. So you can flip it on over to someone else's balance sheet, and all of a sudden they look very, very good on paper. So it's just moving those assets around. I think that Robinhood's days are Robinhood's days are done, in my opinion. All right, so I saw NJ. Was that NJ? NJ says the Quad U, Energy Fuels Inc. I never even heard of this one. Let me see what the volume looks like. You got fair, not too bad. This is the daily, so yeah. I mean, obviously, great looking chart. I don't know what they do, what the business is. But if I had to evaluate it just from a pure technical perspective, I would say it looks pretty good, right? I think that, you've got that uptrend is still intact. I think if you get down below, call it 680, whatever this low is, 680, that's that area where I'd be concerned if it started to break. But I'd be fine buying this when it looks like it's on a strong uptrend. Volume is actually there, although it really started just back here in 2020, which is kind of interesting. So, whatever reason, it looks like institutional involvement got into Energy Fuels Inc. And chart looks relatively decent, right? It's not a parabolic pump and dump looking chart. It certainly is at a pretty sharp trajectory, and it's moved a lot. But it's not something like you saw with what was the Donald Trump SPAC? DWAC. I mean, it's not this garbage, right? To me, that's trash. When you see something do this, then you got to run away from it. But that Quad U, it slowly built up. So all in all, I think it looks good. Obviously, be careful with it because anything that was trading at $2 or at $1 and jumps to $11.40 in a period of just a few months has the potential to drop back down very quickly, just as the whole crypto segment is doing right now. So there you go. Trading solely based on influencer suggestions is just crazy to me. Talk about pumping and dumping. Yes. But you know how many people do that, John? It's unbelievable how many people do it. I get people all the time telling me they're in some trading room and they're killing it. And I just say, okay. I mean, I was on a trading floor with about 180 people. And what I learned on that trading floor is the beauty of mass psychology, and this sounds awful, but the ability to manipulate an entire group of people through your actions. And not mine per se, but there were some people on the floor who I actually wrote about them in the book. He's got a chapter to his name. he would do things to convince the entire room that they should do something, whatever it is. Buy GameStop. And all of a sudden, these sheep flock to that suggestion, and some people will make money, but the vast majority are left holding the bag. And I think that's the same thing with these Reddit chat room stuff. It's crazy. Big Eb, is UUU into uranium? NJ, I don't know. Is it? It might be. I don't know. All right, let me show you what's going on for tomorrow, and then I'm going to wrap up here, guys. My sinuses are killing me. Oh, uranium one? Okay, well, that might make sense. More nuclear power. More nuclear power. Here's what we have cooking for Monday. There's really nothing with regards to earnings, of course. Actually, I take that back. There is earnings. If you look at Tilray, which we have looked at here recently, and it has been atrocious. Oh, nice. It's trading at 666. Anyone feeling demonic on a Friday afternoon? Woo, no, Alan, I'm talking about a guy that was actually on my trading floor. And Jim Cramer is a whole other ballgame of manipulation. Whole other ballgame. So, Monday, guys, Tilray reports earnings. Careful with this one. I know it looks like it's ready to move up, or it's due for a buy point, but man, this thing's down over 50% in just 3 months. This is ugly for Tilray. They're coming out with earnings on Monday. That's the only one that really is happening tomorrow. Here's the calendar for Monday, on Monday. This was the one we already looked at. God, how do I not change the date? Really, am I that pathetic? Yeah, guys. When I have so much going on, it's funny because I was in this office today recording some fun videos that hopefully will be released soon. But let me change this because I feel stupid when the dates aren't even right. Because Monday is not the 7th. Monday's the 10th. There we go. So Monday the 10th, you can see the really only one announcement for the U.S. That's going to be final wholesale inventories. But there are some pretty big announcements for other countries. For example, if you're trading that euro, you see that you have the unemployment rate coming out. They're expecting their numbers to drop. But the euro has kind of found a footing, if you will, with regards to its currency price. Let me bring that up so you guys can see that. There's your euro against the U.S. dollar. So it feels like it's stabilized, gaining a little bit of strength here, but certainly the unemployment number could have an impact on that. Also, you have Australia with their retail sales numbers, of course, looking to see a decline in those. I was surprised to see that, but we're expecting to go from 4.9 to 3.8. And again, the Aussie dollar, we talked about that, I think, a couple days ago. Here is the Australian dollar versus the USD. Not looking great. Downtrend, although it has bounced over the past month. It's potentially going to head back down to these lows and see if we can break those. So economic data certainly being an effect on that. But I'm dumb, John. That's a good one. Oh, the stoner humor comes out as we get to the end of the show. The buzz is not very good on Tilray. But I'm dumb. Chris says, should have sold my Bitcoin at 57. I should have sold mine at 68. I mean, it is what it is. I'm not worried about it. Chowsky, I took an S triple Q, huh? Pretty aggressive. I mean, look, these are all the triple ones, right? So here's S triple Q. I'll explain this in a second. I want to read his question first, everybody. Think that was too aggressive? Nasdaq looking a little weak. So basically what you're looking at here with S triple Q is a triple short Nasdaq. Okay? Triple short. And again, if you're holding it long term, it's dangerous because it will start to decay some of your gains. But if this market does decide to fall apart and we see it really start to drop and drop and drop and drop, then yeah, you're in a great position, Chowsky. I mean, obviously, triple Q would be the best place to capitalize on that. However, what I want people to notice here is when you look at this chart, don't make this mistake. People look at this chart and go, holy crap, it's $6.74 right now, and it was $11,000 in 2010. It's going to go back to $11,000. No, it's not, right? What's happened is this is reverse split over and over and over again because it just keeps on dropping, right? The markets have just been done nothing but go up. So at this point, you're in a decent spot. I mean, you would expect that this is going to bounce at some point. So not a bad play, Chowsky. It is very aggressive. No, I mean, sure, it's aggressive, but I think it's a decent play, especially when you look at what's going on with the Nasdaq. Nasdaq seems to be the weakest. The thing that I'm concerned about with the Nasdaq is you're right at this area that we have not been able to cross. If we got down below, you want to do triple Qs? If we get down below this base rally that happened all the way back here in October of 2021, that means below 372, then I'll probably buy some SQQQ. But I'm gonna be a little bit more conservative here. I've been burned getting short too early, so I'll let it prove to me. You could go right here. I mean, you're buying right at that demand. I would be better for me personally if it broke that demand and then buy, right? You bought right at demand zone, something that's short. That's kind of danger. Yes, there is for the Russell. I don't know the Russell one, but I know there's for the Nasdaq, the Dow. If you go to ProShares, I think it's ProShares.com. You can see the different leverage and inverse ETFs. So let's go to thematic ETF Spotlight, leverage and inverse ETFs. And unfortunately, it's not going to let me. There's the triple long S&P 500. Maybe they don't have the Russell on this one. I think I just sworn they did. Oh, anyway, it's going to take me a sec to find out, but I'm pretty sure there is out there. Draw the box. You mean this box up here? There you go. I don't like that it's not including this tip, so I'm going to go to the opening price right there. But that's the range I see the Nasdaq in. But, you're stuck at the bottom. So, Chowsky, the only reason I say it's overly aggressive is if you're right at a demand zone, that's not the place to be going short, right? That's the place to be actually buying long is at a demand zone, as long as it's a strong demand zone. So you're definitely aggressive. Be careful because you could see a nice bounce on Monday. But if it gets below this, then I think you got a good position on. How does the stock price have to go, or how low does the stock price have to go before the exchange says no, go home and come back later when you can handle your stuff? I believe it's under $5. I think it's $5. The numbers have changed, but it's considered a penny stock under $5. And if it stays under, I think it's a $5 valuation for a specific window of time, the Nasdaq gives them an ultimatum and says you have two choices. Number one, we bump you down or remove you from the exchange, or you get your share price back up above a certain amount. So they'll do a reverse split just to keep that price up. Draw the box. Yeah, I'll see if I can get Antonio Brown's producer to help me make a hip hop song. Right. Okay, that's going to do it for me, guys. I'm going to finish up my nice little glass of whiskey here and go relax, maybe watch some TV. Watch this weekend as my 49ers hopefully take on the Los Angeles Rams, and we need to win. Why? Well, because we make the playoffs, and then I'll be even happier. So, anyway, I hope you all had a fantastic week. Yes, Jeff Manson, I saw we got a comment about Mr. Manson come through. So, yes, he will be on the program. Where'd that one go? Jeff's going to be on Monday, and then hopefully I'll have a couple other guests. Margaret says call Tilly. Tilly can't come on the program anymore, unfortunately. The reason being she's doing some stuff with a certified financial planner, and they don't want social media presence. So right now, I'm putting the kibosh on that one, unfortunately. I'd love to have her back on because Tilly's awesome. I love her straight shooting, just all about market. So we'll hopefully get on soon, Tilly Allison, but that might be a while till who knows what's going to happen with her job there. All right. Sounds good to me. Let's go. What do we got? Was that the last one? That's it. All right, everybody. That's going to do it for me. Hope you have a fantastic weekend. Thanks so much for your support. Again, if you have questions, comments, feedback, things you want me to talk about on the show, TraderMerlin@gmail.com is the best place to email me. Do it. Send them on in. Send them on in. Get those questions in. This show today was driven because of your questions. So thank you, Dorothy. Thank you, Tran. Thank you, Mike and Jeff and Lee. I feel like the girl from Romper Room again, but... Get some women, Merlin? Okay, I'll see if I can get some. There aren't too many women traders that I know. Sue O'Grady, maybe Tilly Allison. I've asked Michelle Volmerang to be on many times, and she just doesn't want to come on. So I'll do my best to get some ladies in the program. Kayla was awesome, right? Kayla is the one I think that if you're a female, that's the one you just got to look at and go, that's impressive. Because here's someone who's in their 20s who is trading for a living, traveling around the world. Like that's... Man, if I was in my 20s in that situation, I guess I was in that situation, but I didn't take it as seriously as Kayla does. All right, everybody, that's it. Have a fantastic weekend. I will see you all on Monday. And if you have questions, want something just to talk about with Mr. Manson on Monday's show, send it in, TraderMerlin@gmail.com. Take care.